this one's about mum and dad developer. The ATO are looking very closely at people who've got land and then they decide to subdivide that land and then put another house on that land and then sell off that land. And obviously there's a need for more housing in Australia and that sort of thing, and there's certain policies that are out there at the moment that may not suit that, and it's best to go and get advice from your accountant or your property advisor. If you've got a block of land, you decide the house is here, that's your main house, driveway, okay, so then you have a good thing. Oh, you know, we're struggling to pay the mortgage, kids need another place, maybe we sell it off. Let's subdivide the block, okay? So that's one strategy, and then maybe we offload that. You've sold off the block. At the moment, you might get away zero tax because it's part of your primary residence and you just offloaded half your property. But some people are taking it a step further and going, oh, we've got that block, let's make some more money out of it. We might be able to make another 100 grand, we might be able to make another 200. We can either put a couple of properties there, or we can put another property there, or we could even put a double-story property there, or we could put a block of flats or whatever, because the market wants more houses. But all of a sudden, that's potentially gone from being the primary residence, and this half of the block is now a developer, and you're actually falling into the rules of a developer. Now the ATO are very closely looking at this. It's been done, people have done it, people have been doing it for years and they've maybe got away with it. But now the ATO are looking very closely. They've got a lot more information on property sales and what's going on in the market. Real estate agents are supplying information. So you could get caught up in the rules of being a developer and then also having to register for GST, and as you go through the cost, depending on how you do it, and depending on if you're doing it yourself or you're getting a developer to do the work or a builder to do the work or whatever, you need to go and see your accountant and get proper advice and make sure you're not going to have a sting in the tail when you sell that and the tax department come along and go, oh, thanks very much, we'll have a good percentage of that, and that's a capital gain, and it may not be seen as capital gain, it may be seen as income, and you may be deemed a developer, which means it gets taxed on your income tax account rather than capital account, where you're more of a passive investor. You need to go and see your accountant and make sure you've got all your ducks in a row, and be very careful about offloading that block and subdividing as well, because you can get caught up in those sort of rules as well. All right, thanks very much.